JB here. Hope everyone's doing an outstanding Monday, March 3rd, 3:14. Talk really quick about the markets, some names I'm looking at, go from there. S&P fusion markets were higher to start today, and boom, we got the reversal, right? Probably the worst thing you want to see. Well, not the worst thing, but uh, considering we had that bounce on Friday, we hope there'll be some continuation or at least some consolidation, and that hasn't been the case. And it's funny they say headlines was the ISM that came out at 10 o'clock, but markets were already reversing at 10 o'clock this morning, right? So let me just go back here. Do I have my list up here? No. I mean, yeah, just the SPY was hitting lows at 10 o'clock. Then we've chopped around here to the until the POTUS press conference where Taiwan Semiconductor announced their $100 billion investment. And then that turned into just the media just asking all different kinds of questions. And I don't know if that's some of the reason why the markets have rolled a little bit, but tariffs are on for tomorrow between 25% on Mexico and Canada, and then the China tariffs. So I don't know if that, it just feels like the market just like it doesn't matter what the uh, the narrative or the possible headwind is. It just feels like it's kind of like we're going to melt for a while. So I hopefully that's not the case, but don't want to be in a spot where if we start we start breaking some areas, right? So uh, I think it's 560. I'd have to go back to some of the November levels. But for now, 582. Hopefully that holds. That's the spot. It was 582.07 just a second ago on the SPY. If that doesn't, then yeah, we'll have to see. And the flip side too, yields keep falling. So, and typically, yields that somewhat would be I would think construed somewhat bullish. But the other thing I note, you take a look at the GDP now, and so yeah, Friday that came out, it was um, as of the end of a week ago, the GDP now was forecasting nearly 2% growth for Q1 GDP for the U.S. And now then it was revised to negative 1.5%, and then a new revision came out, and it's minus almost nearly 3%. It's down 2.8%. So. I mean, who knows the read through here? I mean, some of the data has come out and consumer confidence and things like that, but uh, that keeps trending in the wrong direction, right? So, I mean, there's uncertainty, right? Who knows what everything's going to look like as the tariff situation works its way out, the what's going on with Doge and the government and the layoffs and things like that. But I mean, we've seen this. I think it was last year and the year before we had seemed like every day there was new company announcing layoffs, and you're like, oh, here we go. And then you had the hints at, oh, recession's coming. That never came, but we haven't had the negative GDP reads. So hopefully this kind of works itself out and it becomes a bigger issue. But that's kind of the overall market. I mean, disappointing here to see the markets back at the levels we were at on Friday. Let's see if I have my chart up here. Oh, this is not it's not up to date to the least. I just had this 30 minutes ago, and now it's already outdated. But down at 582 again on SPY, so maybe that could be some support here today. We can start to get a bounce. Um, but yeah, so other catalysts this week. We have Target earnings Wednesday morning, so I don't know if that'll help. And then we have the big jobs report on Friday. So probably that's definitely not going to be a good jobs report. It's just how horrible is the jobs report going to be? But actually, I mean, probably the hate to say bad news is good news for the market, but maybe you get the Fed start worrying about cutting rates again. So that's the overall market. Again, I was watching today. The VIX was kind of just hanging there over 20. Um, let's see. Why don't I have this up here now? But now it's here. It's up almost 17% here. So now it's like if we start getting things start picking up, it might be a rough week. So always be hedging. I'll talk about in a second, but uh, let me get on some of the other names. So first is Lemonade, almost up to $40 today. You know what? I was almost looking to close some more of my 45s and add April's, but I'll be patient. I locked the rest of my 40s in. Of course, in hindsight, not in hindsight, but if I had waited just a little longer, I could have got out for almost 1,000%. But can't complain, right? I mean, 30 cents got out 275 or so. Uh, and then the 45s I'll just hold. And then if it finds some support, maybe if the market finds support tomorrow, I'll look to add some April's because considering where the market is right now and the S&P is almost down 2% and Lemonade's, I mean, it was up much much more earlier, but it's still up 2% today. So I think that hopefully that's a good sign there. So at least some names are doing well. And it's ironic, the even with the market weakness, a lot of my watch list was green for most of the day, and still about a third of it is still green. Adobe's green. Um, you have CME, Lemonade, Boston Beer, Gilead, Zoom, uh, VRTX, CME. Did I ever see CMG? Well, CMG slightly in the green. Uh, all right, so that's lemonade, and then on the flip side, so throughout the day I was looking for hedge ideas or hedge positions, and a lot of these names either the risk reward didn't look good, the premiums were expensive, but I wanted to. So I was looking at, of course, Broadcom would have been a great play today, but the premiums are insane because of earnings. Uh, ASML, Lam Research, ServiceNow. Some of these names you have to go out, like ServiceNow. I was looking at the 850s, and those are still expensive on a risk reward basis. And then I was looking into it, but the premiums, or at least the liquidity on it is kind of tough. So even if I did get in, the concern would be to try and get an exit point. So I finally just went in and got some JP Morgan puts. You take a look, this 50-day moving average, it found some support last week when I had those hedge puts. Uh, maybe maybe if that breaks, maybe it gets down to 240, especially if the market's weak. I continue to look at Visa, and Visa MasterCard are like, I use that Chevy commercial from back in the day, like a rock. Visa MasterCard, just every downturn, it's like you wouldn't even know that the market's selling off because they've just been holding their ground. And considering, if you look at the GDP, if GDP is really negative and the consumer confidence and all, and the Walmart earnings, all those things together, you would think Visa, MasterCard would be more sensitive to this, and they haven't been. So maybe I just have it wrong, or the cracks are coming, and eventually there's gonna be some follow through. I was saying it last week. The time Visa pulls is when I'm not gonna be in the puts, right? Unfortunately, I don't want that to be the case, but maybe tomorrow, if the market continues to be weak, I'll find some opportunities on Visa. And also, I've been staring at strategy, right? MSTR, and it was all the way up at 290. I'm like, good thing we don't have to visit this. Yeah, never wrong, just early. Good thing we don't have to visit this possible swan event, but you can just kind of like feel it. The lower it goes, the more people are going to start to worry or get concerned that there might be some ripple effects across the rest of the market. If it breaks 200, then 150, and then how many people are in? Do they have to sell? Does MicroStrategy have to? The strategy have to sell some of their Bitcoin holdings? And then there'll be a whole huge ripple effect, right? I'm hoping we don't get to that conversation, right? I don't think that happens, but. Uh, so I was looking at the 200 puts throughout the day, and the 200s were $1.99, and then every uptick, the premiums would come out pretty quickly. I'm like, this the risk reward. The stock was at 260. I have to hope for a $60 move by the end of the week, or a couple days to get at least some premium. And now those are $2. But even that, to hold that risk, the bounces, I mean, it could bounce tomorrow. So I didn't really like the risk reward there. I was looking at the 190s. The 190s were a dollar, but now a dollar when the 200s got up to 150, and even now they're up 30 cents. I'm like, to me, that's the risk reward there. Unless those are some oops puts, right? The crazy, is, are we going to get this huge, is you're going to wake up and strategy is going to be under $200. I can't rule some of that out, but I just don't have that. I don't have that confidence yet. And, yeah. I always say it's the hard part about being in puts is like you're rooting for the market not to do well, right? And you don't go. I always use this analogy. You don't go to your local neighborhood barbecue and tell everybody, "I hope the market crashes. I'm in puts," right? It's just not. And not only that, most everybody, if you have retirement, 401ks, investments, all that, every things that are passive investments, those take it on the chin when the market sells off. So it's like you're conflicted because you want to you want to protect yourself and have hedges, but at the same token, you hope things don't the wheels don't fall off. So we'll see. I always say I don't have my bear suit on. So right now we're here 582 again on the SPY. Just definitely in cautious mode. I'll continue to look for opportunities to add some puts. If we're down here 582, maybe we got 37 minutes left in the day. I don't know if I'll add something, but take a look at MSTR, and back in September it was under $150, right? So I'm not saying it gets there. It's funny. It's Barron's puts an article. Some of these people are saying, "Oh, they didn't buy the dip in Bitcoin." Bitcoin was 80,000, and it goes up to 94. I'm like, "Oh, they didn't buy the dip, but they've been buying all the way up, right?" So anyway, all right. So that's MicroStrategy. That's puts. And then just some other names. So Intuit, I was looking at. I mean, take a look at, and I was looking at some charts, especially throughout the day. You keep pulling up charts, especially earnings, First Solar, Intuit, even Unity, Solar Edge, all these names that had earnings and big moves to the upside, they've pretty much given them all back, right? And so Intuit, it looks like, you know, of course, I've been somewhat skewed to the downside on Intuit, but it almost looks like it's going to reverse and fill the gap to the downside. So it just doesn't, some of these names just doesn't look too well, right? So hopefully that's not the case. But yeah. All right, there, folks. I'm trying. VIX is at highs here. Don't be surprised if I had a hedge into the end of the day, possibly in Visa or Mastercard. And that's it. Rock and roll. I'll be back.